Okay, good morning, everyone. Let's get right into the stock market technical analysis. Again, we're looking for profitable trade ideas. I point them out on this channel. And that's basically, at the end of the day, what this channel is all about. We're trying to make money using the charts and technical analysis. I'm constantly pointing out trade ideas and how to trade them and giving follow-up on those ideas. So today we're going to start off with the broad markets. I'll dip into a couple individual ideas, and then we'll wrap up. Tomorrow, we've got, or at the end of the bell today, we've got big tech earnings. I forget which ones. I know it's two of the big ones, possibly Apple, not Apple. It's Google and maybe Facebook or something. Definitely Google. I'll have to look. There's two big companies that are reporting after the bell. So that's going to move the market, whether that's up or down, we don't know. So going to the Qs, which is very heavy in tech, you can see here on the daily chart, we've got a key level really to watch, which is about this 318.50 area, and I suspect that's where they're going to park it today, right there. We're basically right down at, we'll be basically right down at support, and we're going into big tech earnings. So those earnings, depending on how the market takes those earnings, have the potential to even break the support and very likely give us a move down to our next target of about 300-ish, 298, 300 on the Qs, or we'll get a rally here. And the rally, if we do get a rally, I don't expect it going beyond this 335-ish area, 336, somewhere right in there. Okay, so possibly gap up and rally up, possibly break. I'm going to stay short because bigger picture. Again, in the short term, if you don't know what's going to happen, I typically stay with the bigger picture. In bigger picture, I see a downtrend, okay? I see a clear and obvious downtrend. This was a bear market rally. It's very obvious now that rally, and again, at the time it felt very bullish, and that's how these things feel, but that's pretty much been completely faded. The entire rally is gone. So anybody who bought on this rally thinking we're off to new highs, they're underwater. And ultimately, I think we break and head lower, and we get that kind of panic sell move. It should be pretty quick. So I do want to point it out. If we get down there, I am going to be looking to cover, and it should happen quickly. All right. I might not even be able to get a video out with how fast it happens. Going to the weekly chart on Qs, here's your price channel, your upward price channel going all the way back to 2009. So this is your bull market that we're watching. And we broke to the upside. This is all Fed induced. I've talked about this a lot. The Fed's really manipulated the market, but now they're letting the Qs go back to, at least at a minimum, back to its trend. Okay, and its trend line support within the channel is right down there, about that 298, 300 area, right in here. So that's where I think we're heading. Okay, we're going to go tag that. And then we're very likely going to get a bounce. All right, that's why, one of the reasons why I'm looking to cover down there, because I don't expect us to just plunge right through, a more than decade-long bull market trend on the first tag of it in a very long time. All right, so we should get that bounce. Okay, quick update, everyone. I am going to be raising my stock market technical analysis course price. I've had the same price on that thing. I've priced it at $99, very affordable for all, and I've had the same price on it ever since I created it, which is over at least a year and a half, maybe 2 years. It's time for a price hike on that thing. The information is rock solid information, at least from my understanding. I've heard a lot of good comments on it, but I think it's time to prices need to rise, and this information needs to go up as well. I've been told by a couple people that I'm giving it away for free. Basically, it's so cheap, the information that I give, so we need to bump that up. And so I'll be doing that likely at the end of the week. So on Sunday I'll probably bump that up, and it's not going to be, I'm going to bump it up $50. I'm not going to go crazy. Again, I want to keep it so that it's accessible to people. If I price it at thousands of dollars, some people will pay for it, and I think there's still value there at that price point. But the thing is, I'm not trying to just gouge everyone and make a ton of money. I don't want to give it away for free. I think it's it's a respectful thing to if you're gonna value the content, I think you should pay for it. But I don't want to price it too high either. So $50 price hike coming at the end of the week. And if you want to take advantage of that now, link in the description below. All right, moving on, guys. Let's look at we can look at the SPY here real quick. All right, so SPY just drifting lower. Pretty much, let's go back to the daily chart. We're just about giving up that entire rally, which I'm viewing as a bear market rally. So again, I've talked about the SPY, how I think we're going into a bear market. So I've been in my thumbnails, I've been posting bear market because the point is I think we're heading into one. So I want to cue you guys up for what that's going to look like when we actually do, or if we do get into a bear market. So from the highs right now, SPY's down about 12%. We have another 8% or so to go to consider this an official bear market, which is probably going to put us at this 400 mark. Here's the highs down to 400. No, it's only 16. So we got to get a little lower. We need to get down here in 383 area to get that bear market. Okay, so the lows down here, we've got one tag of this 411 and a couple right here about 415. All right, so we start taking those out and down we go. I'm watching the Qs as more of my tell, but looking at the IWM, well, actually, going back to the SPY real quick on the weekly chart, guys, guys and girls. Here's your bull market in since 2009. All right, there's a break of trend. Fed saved it. Fed did a back test recovery. There's COVID. Fed pumped. All right, and Fed created this. Now Fed has inflation. This is just the narrated story of the last 12 years, basically, of what's been going on. It's not earnings based. It's basically Fed based. And so we now have a big sell signal on this weekly chart. Back test a couple weeks, fail, back test again, fail. All right, so that's two to three failures basically on the weekly chart of that red trend line. That's your decade-long bull market. So down we go. It looks like into a bear market. All right. So at the end of the day, a target that I've got is right there. This is where I think we're heading, at least before the Fed starts to ease off their rate hikes, about 338. Okay, moving on. IWM, small caps, we are back down near support, which is about 188. All right, you can see on the daily chart, one tag there, one tag there. So we got two tags of that. We got bounces off each one of those. I don't think we're going to get a third bounce. I think we're breaking. It's probably going to happen on these tech earnings is what I'm guessing. But, maybe but again, it is support till you see it break. It's, it will be support. I think it's likely going to go though. So if it breaks, then I'm looking for a move pretty quickly right down to my 170. We'll just call it 170 right in there, but basically 173 down to 170. All right, that's a zone of support. If it bounces, then, probably back to the top of the range right up here at 209. So any tag up there at 209 is objective to short, or it's objective to short if you see a break of this key level of support. However, I don't think we're going to get a clean intraday break. I think we'll probably gap down, maybe quite a bit, and then start to sell off from there. So, all right, that's all I see in IWM. I don't see much else. There is potential for bullish divergence, and so I do want to point this out real quick. As I clear this out, you can see that basically if we have a pretty swift move and we fall right down to here, we have the potential to hit that level and have a bullish divergence. So it'll look something like this, where the RSI and the PPO will dip down to hit these level that my price targets that I've been looking for, while making higher lows in the momentum indicators. That's what I think will probably play out. And so, I'm likely going to flip long if we get that drop down there. Flip long for some sort of a rally, but we'll take it as it comes, okay? Gold. All right, so this is gold bullion at a level of support. You can see 1, 2, and then we've got a minor reaction here. I think we're going to break and go lower. I'm still looking for this tag of this major trend line right in here. Probably will come pretty quickly, but maybe a move down to about 1840 right now. for an objective long area. All right, again, that is the bull market. So here's the bull market in gold. You can see starting back in 2018. Okay, and if gold drops down here, that would be support. So that's what I'm looking for. Oil. So oil, again, if we're going to get that move down in the markets, we're likely going to continue to see oil selling off. Oil's been very strong, but it's a crowded trade now. You've got retail and everybody else piled in there. And everybody loves the oil stocks. Kramer loves it. So again, it's a crowded trade. And so that's about the time you get a correction. And that's what I'm expecting we're going to get, is some sort of a correction. Not a bear market in oil, but a correction in these commodities and the oil stocks in general. So here's oil futures. I'm looking for more downside. So again, we had an uptrend line, broke trend, back test, and we're continuing to kind of, today we're just flat, but I'm still thinking we're heading down to about 85.50 and the 200-day moving average. That's about where I think it's going. I don't know if it'll go much lower than that. There is big support down here at 66, 670. And there is the potential to do that, but I don't know. I think we're probably going to just hit about 85 and then hold. Okay? And then we'll look at these individual oil stocks here. CNQ. Again, I am short this. I pointed out this is a short trade idea right here on April 22nd. There, that was your sell signal. You had big negative divergence. You had a clean bearish rising wedge. And you had a sell signal with an overshoot. And I love to see that. See that overshoot where it starts to creep up? That's a bull trap, and then boom, big bearish engulfing candle right here. Okay, that's a reversal, and then the next day, confirmation of the bearish engulfing as well as break of trendline support. So it's just a perfect short trade basically as far as the chart goes. All right, so I'm looking for more downside. The first level of support, 61.76. We gapped right below it yesterday and we rallied into it but held below it. Today we're seeing more selling. So that's resistance, 61.70-ish. And then down, next level of support is about 54.75, right in there. That's decent support. We've got a couple reactions. You can see resistance, 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 and then it was support. So that's our next target, 55.75 or so. Again, if you're shorting, you probably want to step in a little bit early and cover because you're likely going to get a bounce there. But from where we're at now and from the sell signal, we're down. It's down about 5% with, with another 9 or 10% from where we're at right now to go. So I like that. DVN, talked about this one. So the sell signal on this one, really I pointed it out right here on April 21st. Look, it was looking like oil was about to break, so I pointed that out as a potential short trade, and then it's just been lights out ever since. From that sell signal, this thing has fallen. As of yesterday, it was down 13% in 2 days. We had a big impulsive rally, but where did we rally to? Let me go to the hourly. I'll show you. Basically, all right, you rallied right to that key level of 57.96. That was your former support. All right, look at all the reactions we have. Support, support, all through here. Kind of held support through here. All right, we held there, right there on the initial sell signal. Following day, gap down. Resistance is now, or support, former support is now resistance. So I reshorted the thing and it added to my short right there today, and I think we head lower. So going on the daily, next level of major support, 50, 45, 50, 50. That's decent support right down there. So we should get a bounce down there, but looking for us to head lower. Tesla. Okay, Tesla's got a sell signal today. It just triggered basically. If you look at the daily, we basically have been plateauing and they've been trying to hold this level right here about 975.20. Today, big impulsive smackdown, and it's down about 8%. So clear and obvious sell signal. Just a big flush of selling, likely due to the Twitter news and all that. And I'm hearing that the buyout for Twitter, a big portion of it, half of it is based on basically Twitter stock or Tesla stock being put up as collateral. So that's probably a no-go if you're. It's just more risk if you're a Tesla shareholder. The fact that a big shareholder of yours has put up a huge portion as collateral in another company. All right, so big sell signal. We got the 200. They're probably going to hold that at least today. But in general, this should head lower. Doesn't mean it has to, but this is one of those last holdouts on what I deem as kind of a mania stock, and it really should flush out here pretty soon. This GME, they all should start flushing out. We don't really have, let's see here, we didn't really have, that's not really negative divergence, but again, the key element that I was watching, here's your upward trend line on the daily chart, support all through here. I've got all the tags of it circled, and then this was resistance. Popped above it one day, kind of failed, popped above it again, impulsive failure, and down she goes. So this was just a stop raid or, a fake out move, bull trap, and down we go. I think it's very likely we're going to be in a downtrend now in Tesla. So I don't see any really solid support. There's a little bit of support right here at about 778, 783-ish. But we've already hit it once, so I'm looking at us heading down to 550 area as the next level of pretty good support down there. So that's what I got. And from where we're at now this can fall quickly, it is the other thing I want to point out. But that's a 40% drop. That's on par with what I'm thinking Tesla's going to do. Okay, TSM, more selling today. Again, big tech earnings are going to shake things up a little bit, but this, again, just continues to drift lower. So on TSM, you look at the daily chart, and it's just pretty obvious at this point that it's in a downtrend. You had clear support here at 107, 108. Our sell signal came on a break of that clear support. We had negative divergence that was building. I kind of pointed that out for a while. And there was your sell signal. I have it circled right there on March 4th. So we broke, all right, back tested for a little while, for about a week, and down she goes. All right, so we're in a downtrend. It's pretty obvious now. Lower lows, lower highs. TSM is filling the gap, it looks like. So there is a minor gap. Well, it's actually been filled. There's the gap. It's about 93.93. That gap comes from back in, November, in between November 13th and November 14th, I think, or 16th. But there's the gap fill. It's a very minor gap, so they're flushing through that. So it looks like we're heading to the next level, which is about 76, right here, 76.70, we'll call it. A decent support there. And if we get through that, we'll probably get a minor bounce there, something. But there's a very thin zone below that. You can see right here, there's basically just no trading that took place right in here. And it just kind of marched straight through. So if you get into this area, this is a thin zone where typically you just flush right through these things. And we'll head down to about 60.58. All right, that would be my final target for right now, is about that 60.58 if we get down there. But there's levels to watch as this continues to roll over. UPS, again, bear flagging. I talked about this. Here's your bear flag. I've talked about this the last couple days. So, and boom, continuing down. All right. So again, still looking at 156.50 area as our level of support. We have some minor support here. It's actually decent support. Lots of reactions right there at 177.75. So we'll probably hold there. If we get there today, we'll probably hold there and possibly get a bounce. But I am looking ultimately down here about 156.90. All right, because that would be the bear flag. That would be that would play out for this bear flag right here like that. All right. So UPS continuing lower, down 3.5%, more, with more downside likely. I like that one. UNP continuing the bear flag. Again, here's your flagpole. There's your flagging action. That sets us up for a move down to our target right now, 214, about 215, we'll call it. Okay, so I like that as the next target. And that one, that's kind of the only target I have on this one for right now. There is a potential target. We can mark this one out. It's right about there. Yeah, I like that as a potential target too. And that would be 195.70. All right, those will be the two targets I'd be watching. Yep, I think more downside on that one. Okay, and here's some of the long trades, long setups. They're not fully developed yet, but I do want to point them out. These silver miners are looking a little bit better than the gold miners right now in terms of long setups. The gold miners look like they have a little more selling to do, but the silver miners look like they flushed out pretty hard. So here's on AG. This is First Majestic Silver. You can see from this, I mean, this is just a complete flush out. It's down 26% in about a week or so. So pretty strong move. Now these are very volatile, stocks, so they do move quite a bit. But again, that could be good opportunity. The thing I want to point out, so basically from the high right here, this is your, this was your, what do you call it? Your Reddit trader. I could probably even adjust my line slightly like that. But your Reddit trader pop right here, and from the high, basically, if we take that, we measure that out like something like about there, basically. We've got a couple reactions. We've got this downtrend line here, resistance, and a couple reactions right there. And we're having a back test right now, a clean back test. Whether my trend line's off a little, it's basically close enough to where this looks like a back test. Now the thing that I want to point out, so this is an objective area to buy down here. On the hourly chart, I want to point this out as potential of what's kind of setting up. You can see that, let me clean this up. You can see where basically we made a slightly lower low right here today on the hourly chart, and yet momentum's starting to move higher. So that's on less, it's higher momentum, not on the R side. Not quite there. Well, it is there on the PPO. If I zoom in on the PPO, you can see we're just kind of like that. So we need to see this kind of do that cross and continue to look good. This could continue to build like a negative or a bullish divergence as it kind of grinds lower like that. And then we get a clear bullish divergence, and then we rip. All right. But the point is, I like the initial look of it. I like the fact that we're at major, we're back testing major trendline support, and we are starting to, bullish divergence is starting to show up. Okay. So I'm starting to nibble on this one and maybe some of these others. This is another silver miner. This one I think maybe has a little more downside to go, but here's kind of your corresponding downtrend line on this one. And it looks like we're heading, we've got a little lower to go, probably down to about, another 5-6% to the downside. So I'm looking for that same setup to show up here, where we basically have, run down, hit major trendline support, which was former resistance. We had the breakout. This is back testing this zone of support, and then we start to put in that bullish divergence. So just things I'm keeping an eye on. It's starting to set up. We're starting to form a trade idea here. Nothing incredibly actionable yet. Again, I'm just starting to nibble on that AG, but I like the initial look of it. And then this one, MTA. So this one had a little bit of a fake out move, or it looked like it was going to break out. Bigger picture, you've got a uptrend. You have a bullish falling wedge pattern. This is the big corrective pattern that this thing's been in for over a year, basically. So big corrective pattern, well defined. We had a breakout, looked like the real deal. We were above the 200, but you did get this bearish engulfing candle here, and it just couldn't play out. So then we came back down, and again, we did have negative divergence in the miners and gold. So I pointed that out and saying, okay, guys, these are looking a little suspect. We might get that retracement back to the breakout point. And sure enough, that's what we got. So now you can see this flush out move right here. We plunged all the way down. We're coming close to that major support, kind of this bullish falling wedge support line right there. And a little more to go. It's probably going to chop around here. I think it's close enough, where it makes sense to probably take a shot. So I've started to, I took a half position. I'll build, if it continues to drift lower and kind of grind around this, I'll probably just add to it over some time. But I like that zone. And then looking at the hourly here, same kind of initial look. We're just starting to, get some bullish divergence that's starting to build. So we can grind around and make kind of lower lows and maybe put in some bullish divergence. Again, it's early. This, it's still, anything could happen. I like the initial look of it, and I like the fact that this is right down here. We've had a big flush out, so we're buying at support. We're buying at good support. It's low risk to buy here in this area, so I like that. So I'm starting to nibble on this one as well. Let's look at the dollar real quick. Again, the dollar, I'm looking at the weekly chart with this one, but you can see this was a clear uptrend started in 2011. And, clear tags of support, obvious trend. There's your COVID drop, hit support. We've broken, and we're doing a back test right now. This overshoot right here is likely just fueled by pretty strong momentum from this uptrend. And we're running, I think we're going to fail pretty soon, whether it's now, I don't know, but I think we're likely going to fail. Looking at the daily chart here, this is a divergent high. It shouldn't go much higher, though. If we go too much higher, let me look at the PPO, might have burned through it. Yeah, starting to. So we shouldn't go much higher from where we're at. The RSI still has divergence. So we still have some negative divergence. We need to see it really turn the corner, which is what I'm expecting it to do. Any minute now, the dollar should start falling. So that, again, this plays into my gold trade, where I think gold is going to, have a kind of a flush out. The dollar's probably going to turn the corner, start to sell off. Gold's probably going to flush down to major support, and then that's probably going to be the end of the dollar's rally and the beginning of what is deemed a good, strong uptrend in gold. So that's what I see there. Okay, GME, GameStop, again, we shorted this thing. We've been shorting this thing for a while, but basically shorted on the break right here in January. Okay, we caught this whole drop here. Exited the short with all my shorts. I exited all my shorts in, about mid-March, March 15th, I believe. We saw signs that we're going to get a rally. I also had to go on vacation, but again, the signs were there. So avoided this huge rally here and then reshorted the thing. I believe I reshorted on a break back below the 200 right there. All right, on this day, which was April 5th. And down we go. This should be lights out, I would expect. If we're going to get that flush down in the markets, this thing should be lights out. There's no reason it's way up here. This is speculative money. We'll probably get, what'll probably cause us selling in this, and it'll be swift, will be the margin calls that go out on some of the other trades. Like people that own this, maybe they own Tesla. And if Tesla's going to roll over, maybe they're on margin. So they get margin called. They got to sell this as well. So, because this is one of those like cult stocks that they're just trying to hold and they think they can just beat the system. And the reality is that they did beat the system. All right. This spike right here, they did beat the system. That was your mania pump. That's when you want to exit. These are the bag holders. Everybody here thinking, oh, it's going to continue to go off to the moon. Those are your bag holders. So again, I'm looking for lower prices, much, much lower prices on this one. Near term, I wouldn't even think about probably covering this one until I hit about $40, which is way down here. This is kind of your first reaction zone. So we should probably get a bounce there. And these bounces will be huge too, by the way. You're probably going to get 15, 20% rallies on this thing. But I think we're going to drop, probably have a big bounce there, maybe do somewhere right in there, and just continue lower basically over time. So I'm looking for this thing to flush out and much lower prices. Moving on. Okay, I kind of scanned around. I don't see much else, guys. So if you're new, check out the course before that price goes up at the end of the week. And drop me a thumbs up, guys, if you're finding value. A lot of these trades I've been pointing out for a couple weeks now, they're all cashing. They're all profitable. We've been pretty spot on this year, and that's because there's volatility. All right. One key thing I want, in 2020 and kind of 2021, it was really a dumb person's market. You could just throw money at any stock. The Fed's pumping. Everything was grinding higher. And there was really just, there was nothing that was really losing money for the most part. But don't confuse brains for a bull market, okay? Now that we have volatility and what looks like the start of a bear market, this is where the technical analysts, this is where the technicals really start to play out. These are the people that make money in this kind of environment. Okay, so we're cashing a ton of money this year. This has been a very profitable first quarter, and I think it's going to continue as we enter this bear market. So if you guys are wondering, if you're looking at your 401k or just wondering why you're losing money, well, it's because you're just perpetually going long, and that's not the kind of market we're in anymore. This is a stock pickers market. This is a technical market. These are the people that are making money in this kind of market. So drop me a thumbs up, and hopefully you're finding value. Catch you on the next one.